it's not necessarily founded to say this is the beginning of a recession, but at the same time, I think what we can agree on is that the volatility is there, the reactions are there.
Hello, I'm Greg Tanner. I'm the head of multimedia here at The National. You're watching A Closer Look. Now, it's been a wild few days on the financial markets. Volatility began ramping up towards the end of last week in the wake of poor jobs data out of the United States, which is, of course, the world's largest economy. That sparked fears about a potential recession in America and beyond, fears that have reverberated across markets in terms of global equities, cryptocurrencies, oil, and even stocks here in the Gulf. Let's get more with our business editor, Salim Essaid. Salim, first of all, this data that came out from America on Friday, what did it show?
Well, it showed that jobs were less, the job growth was less, compared to the month before. It was 114,000 in July, which was considered less growth, and that set fears of recession, where people were wondering, is this what's coming next? And it was quite sudden, so is it going to be a hard recession? There's the SOM rule, which I won't go into the details of explaining, but it followed the trend of identifying that the trajectory that we're going at the moment is inevitably leading to a recession, and that impacted markets drastically, as starting Monday, and which corrected on Tuesday.
Okay, well, exactly how drastically are we talking? I was covering the story on Monday. I saw at one point the Nikkei 225, which is Japan's benchmark index, was down 13% in one day, which is insane. Nvidia, which has been one of the darlings of the stock market of the last year and a half, fell about 15% on Monday as well. What other sort of moves did we see across markets?
Exactly, as you mentioned, there was Nikkei last week, as well as the job markets report, Asia's MSCI index as well, and that seems to have culminated to have the impact that it did, with the Magnificent Seven losing more than 654 billion, shedding off their market cap collectively. That's more than the market cap of Tesla itself, which is part of the Magnificent Seven. So it really created a drastic impact, and which created high volatility and had traders really worried.
Yeah, speaking of volatility, the VIX index, which is known as the fear gauge, it measures stock market volatility. It hit the highest level since March 2020, which, as we all remember, was the week or the month that we were heading into the eye of the coronavirus storm, and no one knew what was going to happen. So that's a sort of gauge of just how scared people were on Monday. That's the global markets. How did markets here in the Gulf fare?
It was quite muted in comparison, compared globally. And also in the region here, that there are many other factors. Of course, the Gulf is tied to the dollar, but then there are also the geopolitical developments that are taking place, such as the Israel war in Gaza, the potential war between Israel and Hezbollah. All of these things are getting the region prepared to get ready for more economic impact. Of course, the region is propped up with the energy market, so it usually has a bit more of a delayed response. But this isn't also the first time that they've encountered this type of thing. So I think with the region, we're expecting more to come versus seeing the immediate impacts right now. Yeah,
it certainly feels like traders here have more hurdles to navigate. Not only do they have to worry about central bank action and volatility across the world, as you say, we've got conflict on a few fronts here that are also making things a little bit more unpredictable. Let's just go back to this reaction that we saw. Do you think it was justified, given that it was one soft non-farms print? Now, that's not to say that there aren't other factors at play here, but to have seen such a huge reaction to one data point, a lot of people are saying the fears were overblown. Is that what you're hearing from people you're talking to?
Exactly. I mean, you get different perspectives based on who you speak to, and a lot of the time, some people are looking just at the specific, 4.3%, highest since October 2021 in terms of, unemployment rate as of July, and and that's that has stoked those fears, leading to the deep red, in terms of drop that we saw on Monday. But at the same time, a lot of people are saying that there's been an increase in the labor market, and that's why it has reflected those numbers. So there are multiple factors that are affecting those job numbers, and that's so it's not necessarily dumbfounded to say this is the beginning of a recession, but at the same time, I think what we can agree on is that the volatility is there, the reactions are there, and with markets a lot of the time, what creates that impact is sentiment, not necessarily the exact numbers, being correct or incorrect, and I think we're going to see this more likely moving forward.
Let's tie all of this back to the Fed, which is, of course, the US central bank. They're coming in for a lot of criticism from people who are saying, you've left it too late to cut interest rates. The market are expecting them to do so in September. The Bank of England already went last week. The European Central Bank went in June. They're saying that it's too late, you've left it too late to start easing and a soft landing can't be achieved. And ironically, this is exactly the same sort of criticism they got in 2001 when 2021, where people coming out of the recession were saying we're going to have a huge wave of inflation and the Fed were too late to raise rates. Now people are saying they're being too late to cut rates, with some people saying we need an emergency meeting before the one that's on September the 17th and the 18th. How likely do you think that is to happen?
According to what I've read and who I've spoken to, unlikely to happen earlier than September. A lot of people are concerned. They see this as a weaker U.S. economy and creating this destabilization, which is going to impact the rest of the world and lead to a recession, and a hard recession, not necessarily a soft landing, as would more likely be hoped. But is the U.S. going to be making earlier rate cuts? No. Jerome Powell, the Federal Reserve Chairman, had said that the policymakers are aware of everything that's taking place and they are in control of the situation. So we'll see if that will happen or not. So I think coming over the next few weeks is going to be an interesting time, because I think we're going to see more of that volatility. We're going to see what the reaction is going to be on the U.S. side. There are also a lot of factors such as the U.S. elections taking place. It's just a busy time and a lot going on, and there's so many different factors playing a role when it comes to this. You can't pinpoint it on one thing to say it's just jobs, to say that, that's what's impacting a potential future recession, or just interest rates. Obviously those are some of the leading causes, but they're not the only ones.
Yeah, a very busy and tricky time to be a central banker. I'm not sure I envy them their jobs. Salim, thank you very much for your time.
Of course, my pleasure.
That's it for this edition of A Closer Look. Remember, you can catch all our previous episodes on our YouTube channel.